Go to paper 2, economics 2019 major. We have universal basic income. Going through these, we're just going to look through them and let's just go down to the question. Yeah, they said identify using the information from the extracts 2 reasons why a person may have a low income. Before going to the extras, why would an individual have a low income? You can have a low income, one, because you are not qualified, like you lack experience to have a job with high income. 2, you might be unemployed. Because you're unemployed, there's no income for you. 3, you might have you might be disabled. As a result, you can't do more. Then you have low income. And maybe you are because you are old. So based on the case study, we have to go through the case study. Let me just find the paragraph and we just move on. Okay, they said a guaranteed minimum income might help some of the poor who currently do not receive state benefits and may reduce inequality in a number of countries. Income and wealth inequality is increasing. For instance, one cause of let's see, I'm just going to look out for a UBI could help the unemployed, including the temporary unemployed. Let's see. Well, that's just the answer. So a person will have low income if you are unemployed. That means there's no money that's going to come into it for you. 2, because you are old, to do some kind of jobs that will earn you more. So you are old, you can have low income earner. You can be a low income earner. If you are unemployed, you have low income. I think that is clear.
Very clear.
So B, they said, explain using the information from the extract whether Russia has a progressive, proportional, or regressive income tax system. So we go back to the extracts.
I still don't get the idea of the progressive,
proportional, and okay, let me explain it this way. When you talk about proportional, it means everyone is paying the same tax relative to the income they make. That is proportional. When you talk about progressive, it means you pay taxes based on your level of income. So high income earner pay more tax than low income earner. Regressive means we pay almost the same tax on indirect tax based on the consumption we have. So we're going to pay the same tax on like sales tax. So irrespective of how rich or poor you have, you're going to pay the same tax on your consumption. Is it clear?
Very clear.
So based on this, they say Russia has proportional income tax rate as people with different income pay the same tax. I think they pay 13%. Here they said state benefits are relatively low in Russia, and the country has one income tax rate of 13%. Just one. So it is proportional. So everybody is going to pay tax, equal tax. That's proportional, 13%. Is it clear? So what you earn, you pay 13% of it on it. What he earns, he pays 13%. What I'm earning, I pay 13%. That's proportional. Is it clear? So, question C.
Calculate using table 1 what percentage of annual average income and cost of record a person will have if he receives
UBI of $337.5 a month. When we talk about a person here, so we'll go back to the case study. Here we have the country for Costa Rica anyway. We have the annual GDP per head and the life expectancy. Here we need to focus on the GDP. So if the GDP per head is 16,200, they want to know how much an individual earns. The GDP, how much it earns with 337.5. So the GDP per head annually here, they said annually. So here we have 16,002. So if he earns $337, so it's going to be $337 multiplied by 12. That's annually for each month. Annually multiplied by 100 divided by 16,200. 337 multiplied by 12 multiplied by 100 divided by 16,200, which is GDP per head. So the answer is 25%. Is it clear?
Very clear.
We'll go to question D.
Analyze using table 1.1 the relationship between annual GDP per head and life expectancy.
So the relationship between annual GDP per head and life expectancy, let's go back up here. So based on what we see here, the annual GDP per head for each country is stated and the life expectancy is stated. So based on what I'm saying, Costa Rica, Finland, Costa Rica, Monaco, Russia, they have high annual GDP per head.
Okay.
And at the same time, they have the highest life expectancy. So the relationship between the GDP per head here and the life expectancy is that those countries with high GDP, annual GDP per head, has the highest life expectancy.
Okay.
And those countries like Mali with low GDP per head is having the lowest life expectancy.
Okay.
Is it clear? So what does this simply imply? It simply implies that countries with high GDP per head would have can afford better health care,
okay,
which means they can live longer than those countries that have low GDP per head. Is it clear?
Explain an example of opportunity cost in the extract.
What is opportunity cost? Opportunity cost is the best alternative for gun. So that means you are choosing one ahead of another. That is opportunity cost. So based on this case study, if government is spending on education, like the universal basic income here, if government of Russia is increasing the universal basic income of the Russians, it might mean that they won't be able to spend on education or healthcare. Is it clear? So first you define opportunity cost and you state the impacts or the consequence of spending so much on social benefits. So if government spends so much on social benefits like unemployment benefits, it might mean that government won't be able to spend on education or healthcare.
Okay.
Is it clear?
Very clear. Ask us whether or not a monopoly will charge high prices.
Yeah. When talking about, they said, okay, discuss whether or not a monopoly will charge high prices. Yes, a monopoly will charge high prices. Why? Because one, when you talk about monopoly is a market structure that gives an individual opportunity to supply to the whole industry.
Okay.
So because the monopoly is the only seller in the market, it means it has a market power. Do you get the point?
Yep.
A monopoly would have a market power because it's the only supplier in the market. And having a market power means you have a price giver. You give price. So because you can give price, that means you can charge higher prices. Why will you be able to charge higher prices? You'll be able to charge higher prices because you don't have competitors. So what the demand for your the demand for your product is price inelastic because consumers do not have any other choice than to always buy from you. You are the only one supplying the industry.
Okay.
As a result of that, the demand for your product is price inelastic, which makes you to charge higher prices.
Okay.
Is it clear?
Very clear.
All right.
G.
Yes, please.
Explain using information from the extract the reasons why someone from India with the same income as someone from Finland may enjoy a higher living standard.
So you might be earning the same amount of money, like I am earning the same amount of money like you are earning. But I am in Libya, you are in Russia, or you are in Turkey. What would make me to have a better living standard than you? One, it might mean that it might be because the taxes we pay here is less than the taxes you pay over there.
Yeah.
So the percentage of income tax is less here than over there.
Okay.
So that means I'm going to have more disposable income than you. So it might be as a result of government subsidies. Government might subsidize goods and services here, and government does not subsidize there. So it makes goods and services affordable for me here than over there, than you over there.
There.
3, but for Finland is a country that is so cold. So people in Finland might be spending more on getting resources that will make them to become warmer because of cold weather. And India might not need to buy that. Do you understand?
Yeah.
Okay, what else? I think that's all about that.
They said 2.
Yeah, I said 3. Okay.
H. Discuss whether or not government paying higher state benefits to the unemployed will reduce unemployment.
I would say yes. Why? If government is spending more on unemployment benefits, it means that those that are unemployed would have more income to themselves. As a result, they will be able to spend more. That means aggregate demand in the economy will rise.
Okay.
Do you get the point I'm saying here?
Yeah.
If government is spending more on unemployment benefits, it will mean that individuals that don't have job would have more money to spend. So that would increase sales and revenue for firms. Firms, as a result, might want to expand because of increasing demand, which means they'll be able to employ more. unemployment would reduce.
Yeah.
Another reason why unemployment, spending more on unemployment benefits would help employment is that those individuals that don't have a job might not be having a job because they are not qualified. So now the government is spending more on unemployment benefits, it might allow them to spend on education and training, which would prepare them to have a better job opportunity. Is it clear?
Very clear. Two.
Question 2 now, right?
Yeah.
Okay.
The Saudi Arabian government is encouraging the growth of the private sector. It is a low-cost oil producer, but exports to South Africa have fallen recently. South Africa has a floating foreign exchange rate, but its central bank has recently tried to prevent a large fall in its foreign exchange rate. A, define a floating foreign exchange rate.
When we talk about floating foreign exchange rate, we're talking about the value of a country's currency that is determined by the demand for or the supply of the currency. That's what we call the parallel market, like the black market. Okay. The dollar in the black market is different from the dollar in the official rate. So that one that the Central Bank of Libya talked about is the official rate, which is the fixed exchange rate. The one in the parallel market is what we call the floating exchange rate. So it is determined by the supply of and the demand for the currency. Is it clear?
Right.
2.
B, explain two benefits the government may gain from the growth of the private sector.
So if private sector is growing, it means the government might be able to get more tax revenue from corporate tax. As the more the private sector we have, the more profit they make, and the more the more taxes paid to government. So increase in tax revenue for government. Okay. Do you get it?
Yeah.
Okay. 2. So no, they said analyze. It has to be analyzed. So first we talked about increasing tax revenue for government because the more the private sector growth means they're making more profit. So they will be able to pay more corporation tax to government. Okay. 2, growth of private sector businesses will mean that they can increase employment opportunities, which means one of the objectives of government in cause of increasing employment opportunity or reducing unemployment in the economy could be resolved. Yeah. So employment opportunity will increase in employment opportunity or employment will increase in the country. Okay. And what else? Okay, yes.
See, analyze where a country with low cost of production may experience a decrease in its exports.
Why will you be having a less cost of production, and at the same time you are witnessing reduction in your exports? When you're having a less cost of production, it means your exports should be cheaper. But there are reasons why exports will not be cheaper here. 1, I said a country with low cost of production might have higher exchange rates. So if you're having high exchange rates, it means the value of your currency buys less of other currencies. As a result of that, your export of goods will be high. Do you get the point here? Yeah. High exchange rate means the value of the dinars is higher than the value of the dollars. So whatever we produce here will be expensive for those that want to buy with dollars. Yeah. So that means our export will be decreasing. 1. 2, the quality of the product we produce. If the quality, irrespective of how our cost of production is falling, if the quality we produce from this country is below the expectation of customers or foreign customers, they will not buy from us. So we might be witnessing low exports because the quality of our product is not anything to write home about. Okay. Is it clear? The 3rd one, producers in this country might be charging higher prices, which means foreign customers will see our products so expensive. You might have a reduced cost of production, but still charge higher prices. As a result of you charging higher prices, consumers might not want to buy. Yeah. So exporting your product out of the country will be less. Is it clear?
One of the questions asked for analysis, I should mention 3 points?
At least 3, yeah.
Okay. We go for D. Discuss whether or not a government should prevent a fall in its country's foreign exchange rate.
Thank you. So, well, for foreign exchange rate, our government should, yes, I said yes. I said government should not prevent, yes. Government should not prevent a fall in exchange rate, which means government should allow the exchange rate to fall. Why? Number one, if your foreign exchange rate falls, it means you might be internationally competitive because your currency will buy, foreign currency will buy more of your currency. Foreign currency will buy more of your currency, which means foreign customers will buy more of your product. Then you become internationally competitive. Because your export is increasing, you might be importing less. Then if your export continues to increase and your export is less, if your export continues to increase and your import is less, it would help your current account balance of payment. It will help your current account. So your balance of payment account will improve because here you do more of export than import. Another thing I said, a fall in exchange rate will increase exportation, which we talked about. This might also reduce importation, leading to improvement in the current account. I talked about that. Government should not prevent a fall in exchange rate based on, So if your exchange rate is falling, it allows your country to be internationally competitive. And because your country is internationally competitive, it can also interest or attract foreign investors to come invest in your country because they know that they can make more output that they can export. Do you get the point?
Yeah.
If your country's export is improving, like other countries buy from your country, investors might want to invest in your country because whatever they produce, they can always sell out of the country. Do you understand?
Yeah.
Okay. Question 3.
In February 2017, New York experienced a shortage of fresh vegetables due to bad weather. For a period of time, the markets for a number of vegetables, including broccoli and lettuces, were not in equilibrium. The price of food tends to fluctuate,
yes. Go up and down,
more than the price of manufactured goods and services. This fluctuations influence the rate of inflation. When is market in equilibrium?
Market equilibrium. When you talk about market equilibrium, it means the market is done. It means what was produced in this market was all sold. We call it market. The market is cleared.
It's cleared.
So it means the quantity demanded equals to the quantity supplied. That is market equilibrium. Is it clear? Is it clear, please?
Very clear.
All right.
They explain how a rise in the price of food would affect the country's consumer prices
index, CPI. So CPI measures inflation in an economy. So for food, this is food, right?
Yeah.
Food is a basic need. So irrespective of whatever the price is, consumers will buy. Yeah. So food is inevitable. So a rise in the price of food will lead to inflation in the economy because people would continue to want to buy. So what does the CPI have to do with this? With CPI, we'll be able to measure the inflation rate of food because food is an item in the CPI.
Okay.
So CPI allows us to measure the price of food today compared to the price of food yesterday, last year, at the same time.
Okay. So
with CPI, we'll be able to measure it. And it has a very big weight when it comes to inflation and when it comes to measuring CPI.
Yeah.
Do you get the point here?
Yeah.
CPI measures inflation rate. But here we're talking about food. If the price of food continues to rise in an economy, it will tell in the CPI.
Okay.
Is it clear?
Very clear.
Okay.
Do you explain how a rise in the price of food would affect?
No, see.
Analyzing the demand and supply diagram, how bad weather is likely to affect the market for broccoli.
Yeah. If there's flood, what happens? The supply of the product will fall. So bad weather condition will reduce supply in the market. If it reduces supply, it will also increase the price of the products.
Okay.
So bad weather will shift the supply curve leftward from S1 to S2. At the same time, the quantity supplied of broccoli would reduce from Q1, will contract from Q1 to Q2, which means there's going to be a new equilibrium price, at a higher price at P1. Okay. Do you get it? Yeah. So that's the point. Supply will fall, supply curve will shift leftward from S1 to S2. The quantity supplied to the market will fall from Q1 to Q2, and the price will increase from P1 to P2. So we're going to have high equilibrium price. Put that in mind, please. High equilibrium price. 3D.
Discuss whether or not a higher inflation rate will benefit producers.
Inflation, like I always say, inflation is good for the economy if it is not more than 2%.
Mm-hmm.
With high inflation rate, it means businesses will be able to sell at a higher price. Then they'll be able to make higher revenues, leading to higher profits. That's the first one. So it's beneficial to businesses, yes or no? So if they are able to make more revenues, they will think of expanding their businesses by expanding their scale of production. And expanding their scale of production would mean that they would have to operate on a larger scale. This could allow them to enjoy economies of scale, reduction in average cost of production. Is it clear?
Yeah.
And the third one, higher inflation rate will also increase the competitiveness of businesses across the world. So if there's high inflation rate here, and there's high inflation rate over there, then we can compete, because wherever we go, it's the same. So all businesses would continue to venture. All businesses will continue to be in operations. The competition or competitiveness will improve or increase in the economy. Yeah. Do you get it? Yeah. Okay.
We go for work.
Yeah.
Changes in the supply of enterprise result in the development of new firms. In 2016, a theme park in Hong Kong made a loss with visitor number falling by 9%. In 2017, the same public limited company opened another larger theme park in Shanghai. The new theme park is expected to benefit from both internal and external economies of scale. Right. Define a loss.
When you talk about loss, it means your total cost is greater than your total revenue.
Your total cost is more than
your total revenue.
Okay.
TC greater than TR. That is a loss.
Okay.
Then we go to B.
Explain, giving examples of the difference between an internal economy of scale and external economy of scale.
When we talk about internal economies of scale, we're talking about a cost reduction as a result of a firm's expansion. Example of internal economies of scale are purchasing economies of scale, risk bearing. We talk about managerial economies of scale. We talk about technical economies of scale. All this happens within the business as a result of the business expanding. So we talk about external economies of scale. External economies of scale implies to a cost reduction as a result of expansion in the industry, the whole industry, like school. Your school, if your school is witnessing economies of scale because it's expanding, that is internal. If all the schools in Tripoli are witnessing cost reduction as a result of more schools coming into the industry, that is external economies of scale. So example of external economies of scale is increase in knowledge and skills of increase in supply of labor. So because because more schools are coming to the industry. Now, a lot of teachers are in the industry. A lot of skilled and qualified teachers are now coming into the industry. It's because of more schools. 2, increase in supply. So supply of resources becomes easier because a lot of schools, so a lot of bookshops are available. A lot of libraries are available now. This is because of expansion. Another external economies of scale is less cost on research and development. Now, because we are able to come together as an industry, we can spend less on research and development. Instead of you to only spend on research and development, now schools come together, they spend little amount, they contribute to do research and development. It's because expansion, because the industry is big, is becoming bigger.
Yeah.
Is it clear?
Yeah. Discuss whether or not consumers would benefit from a firm changing from being a public limited company to a public corporation, state-owned enterprise.
So here we're talking about from public limited company to become a public corporation, like it becomes a government-owned enterprise. I would say yes, because one, when it becomes a public a state-owned enterprise, it means they are more of service to the people than profit orientation. A public limited company will think about profit making. The motive is profit making, but the motive of a public sector business is to service the people. So that's the first reason. Okay. So I said, okay, government can reduce corporation tax. No, sorry. 2. Okay, yeah. The other reason is that because it's a public limited company, it's a public corporation, they might be able to produce through government subsidies, which means prices can be cheaper and affordable for consumers. Do you get it?
Yeah.
So because prices are cheaper and affordable for consumers, the standards of living would increase. So it's good for governments to take over public sector business. Is it clear?
Right.
But they have their own undoings too. The public sector businesses are always inefficient. So as a result, they might not be providing goods and services that are quality. You get it?
Yeah.
But we're choosing yes here. So we choose yes because it becomes goods or services might become affordable for people. They will be subsidized. That means government will be funding it. As a result, their cost of production will fall. And three, they think more of the society, they think more of the people than profits. Any question about that?
No.
So that's all about it. Right? Yeah.